All right, guys, we got that oversold bounce, and this is why I say don't overstay your welcome, because stocks are selling off this morning. And this is the time now. Take your profits, move on, sit on your hands. You don't always have to be trading. I understand if you short sell and play the other side buying, then there's always a trade. But if you're just buying, okay, I know a lot of you are, then this is the time to do nothing, in my opinion. We need to see how things shake out here over the next few weeks leading up to till earnings season, okay? And just know there are signs right now that the economy is weakening. And some people say the soft data is already showing that we're heading towards a recession, okay? But we need to see more proof of this. But just know these companies that did report, like FedEx not too long ago, they cut their guidance. So that shows shipping is slowing down, right? That's a big indicator of the economy. Less goods being purchased, right? Less volume. And then Lennar, for the home sector, they cut their guidance. So that's not good, okay, for the housing area. And then obviously these are big, factors of the economy. And then also consumer confidence was at an all-time low, or the lowest it's been in like 4 or 5 years, something like that. And so the indicators are there. Okay, now it will all come down to earnings, guys. Okay, remember the 3 pillars holding up the economy are the macro, right? The technical and the fundamental. So macro and technical, obviously we broke on the charts, right? Under the 200-day moving average, which is not good. A death cross where the 50-day moving average goes below the 200. We've seen that with a lot of stocks. So technically, like I said, we retested the 200-day moving average, but we haven't really gone above that, closed above for 2 consecutive days. And so that's why I was saying just in the short-term account, play the oversold bounce where it goes and retest, the 200-day and then get out, which right now it's rolling over, so it looks like that's going to be resistance. So technically we did break, okay? Macro, we know that's not good with the tariffs, right? And everyone uncertainty out there with Trump's changes in policies and how inflation will be affected. Jobs, right? Obviously, people, if they're worried about job security, then they're not going to spend as much, right? And this is why maybe they're not going to travel as much or go out as much to restaurants. So services inflation can come down, whereas goods inflation maybe goes up with tariffs. So I just put out a video saying how that could flip. We know services inflation has remained high while goods inflation has been down. That could flip now with tariffs, okay? But anyways, guys, so we got to see how the earnings reports come out with, the big banks reporting in about 3 weeks, okay? If JP Morgan, for example, Goldman Sachs, if they're lowering their guidance, that's going to be a big problem, guys. And that's where we could really get that next downturn with the market. So just be aware of that. That's why I'm saying right now is kind of a wait and see approach, okay? And then we will find good opportunities. Like I said, if stocks do decide to sell off, we're going to be ready to buy, in the Millionaire Maker portfolio at really good prices. And like I said, if we get oversold levels, that's where I like to come in and do some scalp trading, day trading, okay? When the RSI goes below 30, right, we can play it back up, make some money, get out of the way, move on to the next trade. Remember, scalp or day trade in the short-term account is all I'm doing. And then long-term investing, 5+ years where we can get excited on dips.